From the beginning of time, man has always had a pursuit of the best quality of life possible. That quality of life is not possible without resources. The form of resources we have accumulated has changed over time from cowrie shells, state-controlled money, precious metals, real estate, and stocks and bonds. Over the past 100 years, the world has been dominated by the US dollar and its reserves. But everything that has a beginning also has an end. A new financial revolution is upon us with the emergence of a digital economy. The way we earn, spend, and accumulate resources is fundamentally changing. A new asset has appeared that the wealthy have overlooked. Bitcoin has become the best performing asset of the past decade by far. With only 21 million ever in existence, there are more millionaires and billionaires in the world today than there are Bitcoin. Just by holding 0.25 Bitcoin today will put you in the top 1% asset holders in the world in the next 5 to 10 years. If you would have invested $100,000 in Bitcoin in 2013, today it will be worth more than $15 million. Bitcoin billionaire Raoul Pal says, Bitcoin's performance is so dominant and so all-encompassing that it is going to suck in every single asset narrative dry and spit it out. Never before in my career have I seen a trade so dominant that holding any other assets makes almost no sense. This is not an industry you can afford to ignore. If you want to remain in business, then you must adapt. Are you offering services in Bitcoin? Are you accepting payments with digital currencies? Have you adopted blockchain technology? Blockbuster Video at one point was the most dominant video service in the world. They had the opportunity to be part of Netflix, but they ignored the changing technology. Where is Blockbuster today? Where will you be tomorrow?
Good morning, everybody. Welcome to Early Morning Crypto Talks. This is Bitcoin Brandon from Los Angeles, California. Go ahead and type in the chat box where you're listening in from. We are still suffering from a winter storm right now. I was just watching the news, and some cities, I think Fresno up north, having major flooding. They said something else too. I never really heard this term before. So it's about, they're saying that there's an atmospheric river. I never heard that term before. Atmospheric river that is coming across California and dumping that river of water on California. So we definitely need it. We don't want it, but we definitely need it. So my name is Brandon Aviv. I am the CEO and founder of ILCA, Ivy League Crypto Academy. As a disclaimer, I am not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share a suggestion, and it is up to you to make your own important financial decisions on which direction you want to move into. Now, Fridays, I take Friday off. I don't have any lives. I don't do any crypto talks. And yesterday seemed to be the day where, I don't know, shit hit the fan. Not just in the crypto world, but in the entire financial world. Now, I first noticed the crypto market took a big dive. I didn't think nothing of it because I was expecting that to happen because of the Mt. Gox case. If you guys have been following, the U.S. government was supposed to, and I got to see on the news today if they did. I think the news is going to be overshadowed. That's going to be overshadowed with the SVB Bank news. But the U.S. government, all that seized crypto from Mt. Gox was supposed to be going back into the hands of investors on yesterday. And I knew that when that happens, there's going to be a massive sell-off. Imagine 2014. What was the price of Bitcoin back then? $300, $200 a coin, maybe $400 a coin. And then all of a sudden, 9 years later, you got hacked and all your tokens is gone. 9 years later, you get the same amount of tokens back that you had before, only this time it's not worth $300 or $400 a coin. It's worth $22,000 a coin. what are you going to do? You're going to sell. So that's what I thought. Then I start hearing about a bank run going on in Silicon Valley. And the stock market dropped like 600 points in a matter of minutes. And I was like, whoa, what's this? What's going on? A Silicon Valley Bank. And then people start shooting me messages. Is a crypto storm here? Is the financial storm here? For those of you who've been following me, I've been doing a series called the Crypto Financial Storm is Coming. And I'd only do it once a month. And it's about time, I didn't do it in February. I need to do it. I definitely will do it this month at the end of March. But the financial crypto storm is coming because I believe that the entire crypto market will do a collapse the same way the .com internet did, and then it will be reborn again. And the key for us right now is to position ourselves to be able to survive when that crash happens and be able to pick and invest in the right companies that will survive that crash. But I also talk about why or what could cause that crash. What could be the catalyst? What could be the spark to make that happen? And one we're going to talk about now, the bank. See, the crypto market dropped today or yesterday, not because of crypto, but because of what was going on outside of crypto. Now, we'll talk about how did crypto get caught up in it. It's a big thing. We'll look at that when we look at the articles. So first and foremost, let's go ahead and share screen. I recognize you guys. This is Saturday morning. I see Joyce Easley's on the line, Stephen A. Smith, Martha Cameron, Marnita Casa, Anna Clark, Elijah Morgan, Fallon Aguilar, Van Hairston, Janelle Appling, Melissa from the UK. I got one of her articles I'm going to be covering today as well. So good morning, everybody. Let me share screen. I want this screen right here. Okay, so you should be able to see my screen. And you see you, Jamal from Pasadena. So let's look at the crypto market cap. Now, this is down below $1 trillion. We've had two major hits in crypto the last week and a half. The first was Silvergate that caused the drop last week. And now we have a bank in Silicon Valley that was the second cause of this drop right here. So market cap is at 959 billion. Bitcoin is at 40.5. Ethereum is at 18. So this is across the board because these numbers are consistent. Ethereum is up just a little bit, which makes me believe people are putting money in Ethereum as a safe haven right now. This was at like 17.6%. Now it's at 18. So this is one specific coin. 20,100. This was at 19,000 yesterday, and it's popped back up. Let's see, down 10% in the past week. Ethereum below 1,500. 1432 is down 8.8% in the past week. Tether stays the same. BNB is down 6.1% in the past week, but this is interesting. USD dropped dramatically off its peg. Now starting to come back up slightly. It will come back up because of what? Well. It all has to do with confidence. Logically, it should come back up because their stake in SVP was, I think, 6% or close to 10% of their holdings. But it can spook everybody, which it shouldn't, but it can spook everybody to want to be running for the hills. This is unexpected. And I'm going to talk about this. My biggest fear has never been USDC. My biggest fear has been Tether. And the reason, you know what, and I'm learning a lesson, and I should have known better. The reason why I was big on USDC is because they actually have been audited. They've actually been cleared by the US government. They know where all of this 37 billion market cap, where that money is. It is accounted for in multiple banks around the country and the world. Whereas Tether, on the other hand, has never issued third-party audit. They don't have just US dollars backing it. They have a suite of things that they is backing it, which I don't know. So logically, what I was saying was true. Here's the fault in it. The fault is that USDC was dependent on banks. Remember the crypto storm is coming? What if the banks fail? Well, if the banks fail, and more tethering to the US dollar, the US, I did not fully account for that. So I'm learning a lesson here. This, I believe this will survive this. Ripple down 2.1% in the last 24 hours. Cardano's down 2.9%. But the past week, it looks like they kind of rebounded over the last 24 hours just a bit. Matic, Dogecoin, and I always say whenever the stock market goes down and crypto follows suit, crypto rebounds first. So there was a big rebound from last night. But also I'm looking at Binance. So really is tomorrow tomorrow afternoon, when the Asian markets start to wake up for Monday morning. We'll see how they react to the US. Wait until Monday through Friday. So we'll see how the crypto world reacts to this come Monday morning. If they start fleeing USDC, I would just to be on the safe side, and this is not me giving any type of financial advice, especially if you're spooky. No, you're afraid and you're not thinking long term. I will probably move my coins off of USDC and right into Tether. But you're losing 10% to it right now. That's the only problem. You're losing value. LOL, 8.5%. To be on the safe side, I would do 50%. I would probably leave 50% here, move 50% to Tether if I'm going to take that loss. But I believe that this should pop back up within, I don't know, a week or so, if not sooner than that. Back up. And when I say pop back up, meaning pop back up to the dollar. But there's going to be another thing that's kind of holding this down, which is a company called Circle. So that has with the USDC. So anyways, let's keep going here. What's the rest of the market doing? Let's go with best performers over the past week. Kava. So these are the outliers that have, not been majorly impacted by yesterday. Kava's up 8.9%, but it is down 2.3% in the last 24 hours. Pax Gold is up 4.2%. Bone Shiba Swap. We saw this one in our crypto, in our inner circle earlier this week. Remember that? Bone Shiba Swap. That's up 3.4%. Leo token is up 1.7%. And then Told, Tether, Edgecoin BUSD. All right. Worst performers over the past week. Who took the biggest hit? Our AI token, Singularity Net. Wow. Down 34.8% in the last week. Then Dash, Mina Protocol, Frac Share, Stacks 31%, Synthetics 29%, Optimism, Lido DAO, OKC, EOS, Phantom, Litecoin. Look at these double digits, really 20% or more down. ApeCoin, Maker, Filecoin, Zcash, VChain, Axie Infinity, Flow. So I'm seeing AI, DeFi, and Metaverse tokens and NFT tokens down big time. Rocket Pool, Huobi, Sandbox, Solana, 1inch, IOTA. Okay, Tron, yep. This is across the board. All right, so let's jump to the news. I agree, Leonard. Time to buy. But wait, you know got to follow it hasn't hit bottom yet. For the WCL community, we just did that training last Monday, Bollinger Bands. All right, let's go to SVP collapse. Okay. No. SVP collapse. Roku had $487 million in cash at failed bank. Rocket Lab, Roblox also affected. So here's what happened. There's not too many banks out there. This is why it affected crypto. Not too many banks out there that are friendly to a lot of crypto companies and startups, especially companies that are looking to get loans. They're looking to get, strong positions. And this Silicon Valley, where's Silicon Valley? Silicon Valley, California. This is where all the tech hub is. So it makes sense if you're a startup company. The first thing you don't go run to Chase or Bank of America. You find a bank like this that's friendly towards these type of startup companies. And of course, a lot of the startups right now are in the crypto space, the gaming space. Roku, 487 million. Several companies disclosed late Friday evening the amount of cash they had, no deposit at failed Silicon Valley Bank. Now, I am not up on this news. This is my first time really diving into this. Did this bank fail? Company Roku Friday that it has 26% of its total cash and cash equivalents as Silicon Valley Bank, which was shut down by the FDIC. So why did the FDIC shut them down? Roku said it had $487 million of cash out of a total of $1.9 billion in uninsured deposits at SVB, which was placed into federal receivership on Friday, according to the SEC filing. So this again is something that hold on, don't freeze up on me. I'm gonna have to deep dive this a little bit. Yeah, this is Roku's filing. That's not what I wanted to see. I'll read that next. The FDIC only insures up to $250,000 of deposits. Additional deposits are considered uninsured. This is the also. I mean, think about this type of crime. The bank will only insure up to $250,000. So people talk about the risks of crypto. If you got more than $250,000 and a bank fails, you lose your money. Now, this happens to be the second largest bank failure in U.S. history. Shares of Roku fell by 3.65% in electronic trading. Roku said it was unknown how much of its cash would be accessible. At this time, the company does not know to what extent the company will be able to recover its cash on deposit. Monday might end up being Bloody Monday. When the bank when this opens up, we might have a panic. What we'll have to see is, will this bleed over into other institutions? The media right now, I was looking last night, they're downplaying this. I noticed across the board. I was looking at Fox, CNN, MSNBC, and the British one, BBC America. And I noticed that they're all saying, "Oh, it was just a small bank. You know, don't worry about it. If you got 250,000, you're good to go. You know, it's just some small." This is going to be a major big deal on Monday morning. Can you guys still see my screen? I don't know. It's just flickering in and out on me. The company said that since it has another 1.4 billion in cash reserves across multiple large financial institutions, and that right there is also smart. Even in the crypto side, never leave all your eggs in one basket. Have them spread out. Roku's existing cash and cash equivalents balance and cash flow from operations will be sufficient to meet its working capital, capital expenditures, and material cash requirements from known contractual obligations for the next 12 months and beyond. That's smart. So they're saying, you know, no matter what happens, we can meet everything for at least another year. Other companies either disclosed they had no or little exposure to SVB, either in deposit or loans made at the bank. Lender SoFi said in a tweet that it has no money deposited at SVB and its only exposure was a small loan. We have no assets with SVB. Our only exposure is a very small lending facility that is provided to us for less than 40 million, which is unaffected by the FDIC's receivership of Silicon Valley Bank. Your money is safe with SoFi. On Monday, if the FDIC comes out and says, we took over not because we don't believe they have funds, but that they probably might have been doing wrong or illegal, wanted to protect the funds, then everybody should still get their money. If they come out and say, yeah, we noticed that they're reporting a balance there and nobody's been informed of it yet. I'm going to read the next article. Again, you guys probably know more than I do at this point. I'm reading this all live for the first time. Space Company Lab said in an SEC filing that it had 38 million in cash, or 7.9% of its cash as of December 31st with SVB. The company made no other comments in the filing and did not address where the remainder of its cash was being held. Shares of Rocket Lab fell 2.3% in after-hours trading. Roblox, a gaming platform company, saw its shares dip only slightly by 0.62% in after-hours trading. The company said that only 5% of its $3 billion cash and securities balance as of February 28th were deposited with SVB. Video platform company Vimeo said its account balance was under the $250,000 threshold. So therefore, the company believes it does not have any exposure to any liquidity. Okay. Sports streaming company Fubo said it does not hold any deposit at SVB. Startup companies that had Silicon Valley Bank deposits with more than the $250,000 maximum insured by the FDIC have become unsecured creditors. The majority of account holders at SVB, which on Friday was shut down by regulators and taken over by the FDIC, had balances that exceed $250,000. Gary Zimmerman, chief executive of Max My Interest, the New York financial technology company, told The Street. The FDIC said on Friday it would take over Silicon Valley Bank and created National Bank of Santa Clara. Whether companies will receive 100% of their account balances or only a percentage remains unknown. Now, what did I say in those of you that's in the crypto storm? What did I say what is a possibility of happening when there's a huge financial crisis and collapse in America and around the world, and there's a bank run and you can't get money out of your bank? And I always said, how could the government swoop in with their CBDC to save the day? Because if the FDIC is only insuring up to 250,000, there's still a whole lot of people that's going to be hurt. So I said they'll use that as an excuse to say, hey, it's all good. Don't worry about it. We're going to issue guys where the government's going to take over. Just like this. The government took over this bank. The government's going to swoop in and take over all the banks. And then we're going to put a freeze on price gouging in America. You got to all prices need to remain the same. Then they're going to do something like this. California is already experimenting with this. They sent us all a California Visa debit card where if they want to, I don't even qualify for this, but they send it to me anyway because they say that my income is capital gains and not earned income. But anytime they had the COVID, or if they're doing some type of stimulus check, I believe, again, as a disclaimer, this is just my belief. I am not stating fact. I can say that. Just because I believe something doesn't mean it's factual. I can be proven wrong. But I believe that the whole COVID thing was a dry run, was a test run for the future to see how can we do things, how will the public react to it. And let me tell you how the public's going to react. If you don't, the government says we're going to back in the bank. We're going to send you a special debit card with your name on it and everything that you can use to access your account. But they can also turn around and say up to just 50% of your money. Now, if you've got $2 million and original way is the FDIC is only going to say you only have access to 250,000, but the government says, all right, well, we'll give you at least half of it, $1 million. What are you going to do? Will you turn it down? Or will you say, thank you, government, for saving us? And you accept it now. You willingly accept the new form of financial system with the CBDC controlled 100% by the government because you need to buy milk and bread from the store. I go far more in detail on this on the Crypto Storm is Coming. But you've got to be a member. Who do I do? Is that our Diamond community I do that for? Yeah, our Diamond founding members. You got to be a Diamond or founding member to get access to that. That's privileged information I don't share publicly. So go to ilcamarketing.com if you want to upgrade to that. It's $199. And I will be doing that. I can give you even the date right now. The crypto financial storm is coming. Saturday, the 25th. Yeah, because the next Saturday is going into April 1st. So Saturday, that's Saturday. Saturday the 25th. The crypto financial storm is coming. And I think it's right about time with this information that I do that, because this is new information to add. And it's proved. I said this last August when we did the first one. You guys are witnessing it. It does not mean people above that 250,000 level will lose all their money. Not until we know on Monday. It is not a clear destruction of all deposits. RKLB did not address if it expects to recover the uninsured portion of the deposit balances. Shares of SVB Financial were halted by officials on the NASDAQ Friday following a liquidity crunch. Okay, shares of SVB Financial were halted by officials on the NASDAQ following a liquidity crunch that triggered an emergency capital release and raised concerns about the value of billions in treasury bonds held in bank portfolios around the country. The bank lost $1.8 billion, in part by losses in a $21 billion treasury bond portfolio. All right, next one. Silicon Valley collapse. Large account holders are unsecured depositors. The FDIC ensures a maximum $250,000 deposit for account holders at banks. Startup companies that had Silicon Valley Bank account, 250,000 have become unsecured depositors, banking experts said. The majority of account holders at SVB. And here's another thing too. Robert Kiyosaki's been saying this for a decade or two. Having money in a safe account in a bank is just stupid. You're losing money every day. Billionaires and most multimillionaires do not have all their cash sitting in bank accounts. Last time I researched this, the average billionaire has anywhere between 25 to 50 million in liquid cash sitting in either a checking or savings account. Now, if they're a billionaire, why only that much? Well, they know they can still buy whatever they want at any given time with $50 million. They also can use that if they're for their checking account to pay their bills. You know, the smart thing is you only have enough money in your checking account to pay your bills every single month. Now, again, I am not giving any financial advice. I'm just sharing information. So where's the rest of their money? It's in investments. It's working for them. Stocks, bonds, mutual funds, real estate, property, precious metals. The next one is crypto, the crypto type space, art and stuff, assets. Their money is working for them, so it maintains its value, and they live off the interest of it. So everyone else, they're taught, save your money, put it in a savings account. You're losing money every year. Silicon Valley had an overwhelming market share of venture capital firms and portfolio companies. The account holders at SVB are unsecured depositors and will be given receiver certificates, Zimmerman said. The FDIC said in a statement on Friday that it will pay uninsured depositors an advance dividend within the next week. Uninsured depositors will receive a receivership certificate for the remaining amount. Really? The remaining amount? So that statement says that they're going to get all their money. If that's true on Monday, you're going to see the whole market turn around. Let me read this again. Make sure I'm not reading it wrong. Uninsured depositors. Who is an uninsured depositor? Anybody that has more money than $250,000 in the bank will receive a certificate for okay, now that they got the certificate, how do you cash the certificate in? See, this thing doesn't happen every day, and I am not a financial advisor, so I'm learning. Of their uninsured, as the evidence still says, of Silicon Valley Bank future dividends. All right, so basically, they're getting an IOU card. You all know what an IOU means, right? And they're saying, we will make you whole by selling the assets and every time the IOU that we owe you. Venture-backed portfolio companies could find themselves with liquidity issues, and the outcome is uncertain. In other words, they say it's like you got it, but you can't cash it in, and you don't know when you'll be able to cash it in. Will it be next week? Will it be 2 months from now? It's kind of like everybody that's been on the New Gen project when they came out and said, oh, yeah, all of your tokens will be worth $1.33 on January 18th. And they said that first week of January. And then January 13th. January 13th rolls around and nothing happens. Now you can see how many tokens you have. You know what the value is by multiplying it times $1.33, but you just can't cash it in yet. When will that? Will it be 1 month? 1 week, 2 months, 6 months? Nobody knows. But you know you have it. That's the same thing with the pillow. So anything run there about crypto, we're watching this happen live in the bank. It's not just in crypto. This is largely a self-inflicted here, because like what I'm looking for is to make sure that this is not a domino effect that is happening that will happen to other banks. See, whenever you're one first, and then it's a roll-up effect. So the FDIC, this is largely a self-inflicted injury. This does not appear to be a systemic issue. The FDIC declined to comment, but referred to its statement that customers whose accounts are in excess of $250,000 should contact the agency. The FDIC is a receiver of Silicon Valley Bank and will retain all the assets from SVB for later disposition. This could take years. The FDIC said on Friday it would take over Silicon Valley Bank and created the Deposit Insurance National Bank of Santa Clara. Whether companies will receive 100% of their account balances or only a percentage remains unknown, said Anthony Chan, former economist for JP Morgan Chase, told The Street. It does not mean people above that 250,000 level will lose all their money, he said. It is not a clear destruction of all deposits. It is possible that some depositors will be made whole and receive 100% of their deposits. Again, the timeline of when. The government moved in to shut down the bank, so there is potential for residual money, he said. I would suspect that the government moved in quick enough that the total destruction will be minimized. The losses are contained, and it is too early to say this is a systemic meltdown. Okay, so now we could just say, let's see. This does not appear to be a systemic issue. And then down here it says, it's too early to say if this is systemic. I don't trust it. I'm going with like I said, I believe that 90% of everything is wrong. I'm going to go with this is the beginning of a systemic meltdown and act accordingly. All right. I don't believe none of this kumbaya crap. They try, don't worry. I think that this is the beginning. The FDIC said transferred over to the new bank, and access to the accounts will be available by March 13th. Really? Okay, wait. FDIC will be transferred to the new bank and access to the accounts by March 13th, which will be Monday. Like I said, everything is going to come to the head on Monday. SVB had $209 billion of total assets and about $175.4 billion in total deposits. The FDIC said the amount of deposits in excess of the insurance limits was undetermined. So again, when people want to run their mouths against crypto, and we look at market cap total, this one bank, 209 billion, that one bank. But when we look at Tether, or better yet, Terra Luna was what, 40 billion or 30 billion? See, Tether is sitting on 72 billion, USDC 37 billion. These are just one bank, and a small bank at that. A bank that the media last night was saying is irrelevant because of its size. And its size is still bigger as a market cap than every crypto except it's bigger than Ethereum. Ethereum's at 172 billion. It's that one bank is still bigger than every crypto coin except Bitcoin by itself. Now combined, the crypto market cap's almost at $1 trillion. So and I say this again because whenever you hear the critics out there want to run their mouths as this is going to end, crypto hasn't even scratched the surface of the world's financial economy yet. Not even close. That means good early adopters. Liquidity crunch at SVB. Shares were halted by officials on the NASDAQ Friday following a liquidity crunch that triggered an emergency capital increase and raised concern about the value of billions in treasury bonds held in bank portfolios around the country. Okay, maybe you guys know this answer to this question. Are other banks by law required to say public right now, or how does the FDIC about SVB Bank? What about all the other small banks? The bank lost 1.8 by losses in a 21 billion treasury bond portfolio. So that's on March 13th. So that's Monday morning. Watch the news. You're going to see people run into the bank. This is it. How many of you saw the movie It's a Wonderful Life? George Bailey Savings and Loan. That's the first time I heard about, this kind of thing. I was a kid. I don't think you're the only one, Melissa. I think it's my system. I forgot to reboot my computer this morning. But I got up late and I was too busy playing video games, so I forgot to boot it. SVB to fail in 2023. Almena State Bank, Almena, Kansas, was the most recent FDIC insured institution to close on October 2020. Okay. $3 billion stuck. Now, USDC is worth 37. Well, it was at 37 billion. It was. So this is not all of their money. This is a small percentage of it. Circle USDC stablecoin breaks peg. Spooked. That's the proper word to use. Just like you have FUD, fear, uncertainty, and doubt, or FOMO, fear of missing out, they can also get spooked. Spooked investors cashed out. No! That will, okay, let me see. Circle USD. Circle USDC SVB. All right. Go by Reuters. Then I'm going to pull up the crypto news sites. They're all stablecoin USDC breaks dollar peg, revealing $3.3 billion Silicon Valley. Stablecoin USDC lost its dollar peg and slumped to an all-time low on Saturday after Circle, the U.S. firm behind the coin revealed that some of the reserves backing it were held at Silicon Valley Bank. Okay, so this is interesting here. It's not that USDC or Circle failed. All they did was disclose, yeah, we got money in that bank too. And people panicked. That happened. So I think it's going to pop right back up. Circle has 3.3 billion of its 40 billion of USDC reserves at collapsed lender Silicon Valley Bank. The coin broke its $1 peg and fell as low as 88 cents shortly after on Saturday. It recovered slightly to trade around 90. Where is it right now? See here? This is starting to climb. 91 cents. It's up 0.3% in the past hour. So I'm going to pay attention to this while I'm doing crypto talk as well. So, that's the worst. Right here. So we're going to watch this, see how fast can this climb right back up. Okay. Silicon Valley Bank collapsed on Friday in the largest U.S. bank failure since the 2008 financial crisis, roiling global markets. It roiled global markets, just one bank, and stranding billions of dollars belonging to companies and investors. Circle said in a tweet on Friday that the company and USDC continue to operate normally, while the firm waits for clarity on what will happen to Silicon Valley Bank depositors. Meanwhile, U.S. crypto exchange Coinbase said in a tweet it was not allowing USDC to be. Coinbase is good for doing that. So if you've got your USDC sitting on Coinbase, you're not going to be able to touch it. They're not going to allow you to exchange it. U.S. dollars over the weekend while banks are closed, citing heightened activity that plans to resume on Monday. And Monday's going to be the big day. Think about this. I do crypto talk for the inner circle on Monday. Should I do it publicly? Big day? No. If you want this news, Monday's going to be a huge day in crypto. My take on it with some of the news, you got to be in the inner circle. $49. You got to be in the inner circle. Miss Casa, my assistant, go ahead and type in the chat box that link. You got to be in the inner circle. I think I have it here too. ilcachallenge.com/sales page. Yes, the /sales page one. Let me edit this. /sales. Yeah, this is going to be a crypto talk you don't want to miss. Monday might be big. All right, I got it scrolling right there. All right. No matter how sound, Circle did not immediately respond to a request for comment about the dollar peg sent outside of the U.S. working hours. Joseph Edwards, investor advisor at Enigma Securities, said the situation was extremely serious for USDC. No matter how sound Circle's operations are, this sort of depeg on a stablecoin tends to fundamentally undermine confidence in it. Yeah, it had nothing to do with it. This had absolutely nothing to do with crypto. This had to do with the dollars. Where's my money clip? My wife got my money. Oh, here we go. This has to do with this. Money. Nothing to do with crypto. So no matter how sound Circle's operations are, this sort of depeg on a stable coin to fundamentally undermine confidence. And they did everything right. They didn't have all of their assets in one basket. They're following all SEC guidelines. They have a third-party audit. All of their money is accounted for. And yet something happens outside of crypto. And they lose their peg, and all of a sudden people lose confidence. The short-term implications here are dramatic and unknowable. especially since systems start to have to be adjusted to the reality that one USDC isn't trading at one USD for the time being. That's the king right there. For the time being. Hold on. My system's acting funny. Okay, show that. No matter how sound Circle's operations are, it will undermine confidence. The short-term implications here are dramatic. Stablecoins are cryptocurrencies designed to maintain a constant exchange rate with fiat currencies, those backed by a central government rather than a physical commodity such as gold, for example, through a one-to-one US dollar peg. Used in cryptocurrency trading, they have surged in value in recent years. USDC is the second biggest stablecoin with a market cap of 37 billion. The largest, Tether, has a market cap of 72 billion. That is the one that scares me. This is the one that will cause a crypto collapse, and everybody thinks it's game over. It won't be, but they'll think it is. USDC's price usually holds close to $1, making Saturday's drop unprecedented. According to CoinGecko data, its previous all-time low was around 97 cents in 2018, though in 2022 it fell just below 99 cents when crypto markets were roiled by the collapse of crypto hedge fund Three Arrows Capital. Traders have been on guard this week for signs of contagion in the financial sector and beyond from troubles for Silicon Valley Bank and crypto-focused Silvergate. Yeah, this is all, I'm starting to see a pattern here. Silvergate, Silicon Valley Bank. Who's next? If there's a third one within the next 2 weeks, this is a big, big problem. All red flags need to be up. And it's not about the crypto ecosystem. We're talking about the world financial ecosystem. You got to be paying attention to geopolitical news. What's going on in politics? I know right now Biden just came out with his spending proposal where McCarthy said it's already dead on arrival on the House. So now the Biden administration is asking the Republicans to submit theirs. And McCarthy turned around and said, well, we don't even think it'll be ready by April, maybe May or June. So now we are in limbo, March, April, May, at least for the next 3.5 months. We don't know what the U.S. budget is. Will we run into a default? All of this uncertainty. Stablecoin issuer Paxos and crypto exchange Gemini also tweeted that they do not have relationships with the bank. So here's what's happening now. You got a bunch of people coming out saying, hey, it's like when a hurricane happens and you go to Facebook and say, safe from Hurricane Brenda or whatever. Everybody is coming out saying, we're safe. We're safe from Silicon Valley Bank. Not us. We ain't had no money there. Don't get scared. Sad news today regarding Silicon Valley Bank. Our thoughts are with all those impacted. Gemini does not have any banking relationship with Silicon Bank. This includes all Gemini products and services, including the Gemini dollar. Yeah, they're all coming out now to say that. All right, this is an article I got from Melissa from the UK. I have not read this full thing yet, but stocks may crash. What? This is from Markets.Business Insider. Stocks may crash 30% in days as Americans run short of cash. Isn't that what happened with Silicon Valley Bank? They had a liquidity crunch. There's not enough cash. Short of cash, and investors jump ship, a market guru says. I can move this ad out the wall so I can see. There we go. U.S. stocks could plummet as much as 30% over the next 2 months, Larry McDonald said. The Bear Trap report founder sees higher interest rates choking demand and hammering the economy. McDonald also predicts investors will swap stocks for bonds to earn higher yields. Okay. U.S. stocks could plunge up to 30% within the next 2 months as interest rates squeeze consumer and jaded investors swap equities for bonds. The founder of the Bear Trap Report told Fox Business on Wednesday that his set of 21 systemic risk indicators point to one of the highest probabilities of a crash in the stock market looking around 60 days. The crypto storm is coming. I'm doing this in less than 30 days. Actually, 2 weeks. Week and a half from now, actually. Today's the 11th. In 2 weeks. Don't think I got to save this article about this one. Because we got to talk about what can we do to prepare for this. He says the highest probability of crashing the stock market looking out 60 days. McDonald highlighted the Federal Reserve hiking rates from nearly zero to upward of 4.5% within the past year in an effort to curb historic inflation. Higher rates lift borrowing costs. One thing I talk about also in the crypto storm is coming is that what crisis could happen, whether it's man-made or natural, all of this, that what we're seeing right now is self-inflicted. Let's start with 2008. The banks and the lenders knew what they were doing with those high-risk mortgage loans that they had going, the subprime loans. They knew that that was wrong, and they did it anyway for money. Then let's look at fast forward, because I don't know how many of you guys have recovered from 2008. The banks and businesses too big to fail got bailed out by the government. Then we had COVID. Well, Brandon, wasn't that a natural disaster? COVID, okay, again, this is my opinion. Whether it's factual or not, I don't know. But my opinion, I believe COVID was released on purpose as a test. At best, it was an accident from some Wuhan lab that it got out. Somebody was reckless. At best, by accident, still, it was man-made. The way. And that caused a trigger effect, a domino effect. It went worldwide. Millions of people dead, meaning their workforce is out of the economy, their work production. Then the rest that survive is using up the resources of every country, medical resources, financial resources. People couldn't go to work. Kids couldn't go to school. Then all of a sudden we printed all this money and gave out stimulus checks, which caused inflation. And now this inflation is causing them to raise interest rates, which is causing a cash crunch, which is causing banks now to collapse. Do you guys see the domino effect of this? How one event can impact others like a cascade. Oh, yeah. Weather in California, Lynetta. So, I forgot another major thing. The war in Ukraine. Putin did not have to invade Ukraine. That was a choice. The natural disasters and the weather in California, well, that's not by choice unless I'm not going to get into global warming or any of that. That's a natural disaster. The hurricanes in Florida. But also all this other stuff, all of this was by choice. McDonald estimated that every 1% increase in rates, and whenever all of this is by choice, you got to ask the question, who benefits? Who is capitalizing off of this chaos? Who's coming out on the other side better than they were before? It ain't the little guy. I'm not going down that road on this. This is a public broadcast. Let me shut up. McDonald estimated that every 1% increase in rates translates into a $50 billion rise in cost for middle-class Americans. Middle-class Americans. What about the wealthy? They ain't impacted by it. He noted that interest rates on U.S. auto loans are approaching 14%. And nearly 20% of loans cost over $1,000 each month. The withdrawal of capital from the middle-class families is so spectacular. You see, even the federal government stated this, that last year, from November 2021 to November 2022, the average American lost an extra $400 a month out of their household budget. They didn't do anything wrong or anything different. They just have less spending power. $400 a month, less spending power. Multiply that times 12. Middle-class families are getting hammered. So the consumer pressure is violent. The former Lehman Brothers trader and author of a book about the bank's collapse, and then we got to put politics into this as well. On top of this, one political party wants to get rid of Social Security, Medicare, or any loans for college. While the same families that's going to be hurt by that are earning less. Interest rates are higher. And inflation. So he's right. Middle-class families are getting hammered. Yet, at least half of these middle-class families will still vote against their own interest because they don't know any. Let me not go down that route. People who invested in the S&P 500 2 years ago have made virtually no gains, he noted. Wait, all right. Crypto's the best performing asset of the past decade, period. Oh, you don't get in crypto, it's a scam. All right, so you went into the S&P 500 2 years ago and you ain't made no money. But that's not a scam? They might increasingly view a risk-free return of over 5% from government bonds. 5%? 5%? Hell, I taught my assistant Marnita how to make more than 5% trading on her own money. Moreover, McDonald pointed to mounting signs of an impending economic downturn. He singled out the current inversion of 2-year and 10-year treasuries, a classic recession indicator, and the recent underperformance of regional banks. I said this last year. The politicians are afraid to say it, but I said it last year. We are already in a recession. Oh, I like that one. S&P, you made no money and you paid fees for the privilege of making no money. They charge you. They make money off of your money, but you don't make any money. There are really massive cracks under the surface, and that's why the market probably goes down 10, 20, maybe 30% in the next 60 days. What is the date of this article? Oh, you got to be kidding me. This article came out on March 9th. What happened just the next day, March 10th? And the whole market went down. Wow, I got to follow this dude more. Let me make a note of him. Larry McDonald. Got to make a note of good old Larry. He called this one day before the collapse. Pay attention. Good find, Melissa. Larry McDonald. I've heard of him before, but I will pay attention when I hear his name popping up. Okay. That was before Friday. That was on Thursday, before the collapse. Okay. The finance guru brushed off the blowout jobs report in January. He noted the labor market was booming just before the dot-com crash. The crypto financial storm is coming. And we're seeing the signs. The same thing happened right before the dot-com crash, and employment data has historically softened in February and March. He suggested weaker jobs figures over the next couple of months could trigger a crash, as they would fuel doubts about whether S&P 500 companies can hit Wall Street earnings forecasts. Companies' stocks are typically valued relative to their profits and could see their prices slashed if earnings disappoint. McDonald isn't alone in predicting a market slump. The Big Short investor Michael Burry, GMO co-founder Jeremy Grantham, and veteran economist David Rosenberg have all rang the alarm on stocks in recent weeks. Yeah, I need to save this article because I'm going to use this again on the crypto storm is coming. All right. Yeah, that was a good find, Melissa, on that one. That was right before the Friday crash. I want to now pull up crypto news directly. This is all, none of those sources were from 6.3 billion. Okay. Yeah, I want to see what they're saying about that. Dogecoin well moves. Doge. Hackers exploited the appeals court decision approving 1.3 billion Voyager acquisition. Okay. Wait, what? So Binance can purchase Voyager? Wow. I'm going to cover the news on crypto analyst Bitcoin. Two USC commissioners blast their own agency for rejecting VanEck Bitcoin exchange traded application. Okay. DeFi altcoin crypto defies crypto downtrend, surges 51%. All right. 60 billion in crypto evaporate. Ooh. Yeah. What time is it? Coin warns of crash. Okay. Yeah, this is stuff I might have to really cover on the crypto storm. That's still 2 weeks away. A lot can happen in 2 weeks. Let's take a look at some of these. Yeah, I'm going a little longer than normal today. So anybody that's got to go out there and enjoy the rest of your Saturday, by all means, more power to you. But I need to pay attention to what's going to happen to our money. All right, come on, load up for me. All those are loading. Let's see what else is happening. Not the Biden administration, says House. We covered this earlier this week as well. The politicization of this. So they're already fighting. The future of Bitcoin will be determined by Congress, not the Biden administration. How arrogant, though, that a U.S. politician thinks that the U.S. can control the future of Bitcoin. Crypto trader analyzes Bitcoin and Chainlink. Says says current stress test is better for the long run. I agree with that. Bitcoin and crypto liquidated in just 24 hours as powerful law enforcement agency targets. So now this is March 10th. This is Friday. This is before. U.S. Federal Reserve creating specialized team of experts on crypto. Okay. Also, come on. Don't. These articles is not. showing up for me. All right, we'll start with this one. Over 60 million. Now, I like that. You'll enjoy your Saturday here. Now, that's Facebook user. Who is that? You're not showing up as who you are. I like to know your name. I appreciate you like hanging out with me. Facebook user. I will enjoy my Saturday here. Over 460 billion in Bitcoin and crypto could evaporate in a worst case scenario, warns analyst Benjamin Cohen. Widely followed crypto analyst Benjamin Cohen is identifying a worst case scenario for the crypto markets as prices spiral downward. In a new strategy study, tells YouTube subscribers that the crypto markets could give up hundreds of billions of dollars, a correction similar to the dot-com collapse. Interesting. Like, I haven't been saying this. That's Kevin and Daryl. Thank you, Kevin. Haven't I been saying this? Those of you guys in the crypto storm is coming. Are you diamond members? It pays to be a part of our ILCA community. You are seeing it like parallels to today's crypto markets. He uses the market rally and decline percentages from the dot-com era of all crypto assets may be in a position where it witnesses one more capitulation phase, similar to what happened to the NASDAQ in 2022, when it crashed by about 30%. 30%. We just had Larry McDonald say that the stock market is going to go down by 30%. There's no stuff for everybody. What was the prior low? 8, 40 to 50% correction. Yep. And again, and you're gone. You guys, can you guys still see me and hear me? Let me turn off my camera. Maybe that will help a bit. It could be 400 billion. I think the worst case scenario for crypto said, "Oh, I'm breaking up really bad." So yeah, let's see if I can correct this in any kind of way. Testing. You guys still got me? My audio. It went worse. Let's do mic. Yeah, everything is shutting down on me now. So I know what to do here. Let me stop sharing. All right. If you guys can, now it sounds good for you guys. I'll read this without showing the screen. How about that? I'll finish just this article. The other two, I will. I might save it till Monday. You know, so let me know if you guys can hear me fine right now. Let me move this from Juanita. Good. All right, I will try it one more time, just because it's good for you you guys that are visual. All right, this again. I think worst case scenario for crypto would be somewhere around 400 billion. Are you kidding me? That would put Bitcoin down around the again $7,000, 8,000. Decline to a $500 billion market cap would evaporate more than 460 billion cryptocurrencies. The total market cap of writing is 900. Says a crash from its peak occurred over a 2.5-year period. When the Nasdaq dropped by a total of 83%, $1 billion. Crypto analysts, a do or die situation won't crash if vital BTC support level crumbles. A popular analyst is warning that Bitcoin is at a critical moment and may crash if the top crypto asset fails to maintain support at a key price. An analyst, Craig, tells his 548,000 Twitter followers that a do or die moment has arrived for Bitcoin. He says it cannot hold the $19,000 to $20,000 range. The asset plummet to the $16,000 range, a more than 15% drop from its current value. Some colloquial Bitcoin thoughts: market looks rough, range high, rejection, big inefficiencies below. 19 to 20,000 last, and only technical structure as a do or die punt. Any acceptance below. What's happening outside of crypto? What's going to happen with the FDIC and the banks? Circle and USDC. Yeah, we talked about Benjamin Cohen. Says it may take another 6 months before Bitcoin turns bullish. I don't expect Bitcoin to turn bullish this year. I told you guys before, my timeline. I'm not going to say it publicly. I said it to our inner circle. I have a timeline. I know exactly, and I got to say it in my opinion, but I know exactly when you're going to see this turning around. And that's for our inner circle. He warns that the crypto markets may deliver big losses to both bears and bulls before a sustained move to the upside kicks in. And the date that I know, it's going to be not cocaine bear, but cocaine bull. It is going to explode. All right. And then the last one, was this able to open up yet? Nope. Yeah. 6.3 billion erased from USDC market as stablecoin depegs. USDC is struggling to make this to the US dollar after revelations that some of the cash backing the top stablecoin is stuck in Silicon Valley Bank. $3 billion backing USDC is locked in the collapsed bank, which is now controlled by the FDIC. The revelation triggered a mass sell-off of the crypto asset, sinking the coin's market cap from 43.6 billion to 37.3 overnight. Circle is joining a long list of companies who are calling for the U.S. government to step in the bank. 100 venture capital firms. Like other customers and depositors who relied on SVB for banking services, Circle joins calls for continuity of this important bank in the U.S. and will follow guided by state and federal. Silicon Valley Bank's collapse represents the second largest U.S. bank failure in American history. The bank was shuttered on Friday by the California Department of Financial Protection after reporting a $1.8 billion loss to U.S. bonds. The Fed's hike prices in the downward. See nothing to do with the bank doing anything wrong, crypto doing anything wrong. It's the Fed raised the interest rates and it messed up the U.S. government bonds. The USDC is the second largest stablecoin on the market. In addition to the cash assets, Circle. Okay, let's bring this back. All right, well, that is Crypto Talk for today. I hope you learned something new. This is Saturday, so it was public for everybody, but we do this almost every single day, Monday through Thursday. If you're a part of our inner circle for $49 a month, and you're getting at least 7 to 8 hours a week with me, I charge $250 an hour for one-on-one time. So you're getting 7 to 8 hours a week for $49, and you're getting this information. I will definitely, I'm going to be ready on Monday morning because I think it's leading that Monday could end up being Bloody Monday morning. So that leaves, I have a decision that I'm going to have to make myself. Where am I going to put my USDC holdings? Am I going to sit on it? Am I only going to do 50%? I'll at least give you the options available. Do nothing and allow this thing to pop back up, which I think it will. Or have the FOMO, or not FOMO, but the freaking out, sell it all and move it into Tether, all 100%. But I'm losing 10%. Or play it safe that way and do 50%. I'll move 50% off onto Tether and leave the other 50% on USDC. Or I move them all, forget Tether, and just move it into Bitcoin. Bitcoin dropped, maybe I can make some money off the Bitcoins rising back up. But I'm afraid Bitcoin could either go down to 16K. So I got to be careful with that. So those are the options. Also, I know the market's about to drop, which normally I would be like, all right, it's time to play the Tether game, so I don't ride it all the way down. But is that safe to do right now? We just saw USDC drop by 10 cents. I don't even know if I can play the safety. So then, the final option, forget the short-term thinking. Remember that I'm in this for the long haul, and I already know the date when all the markets is going to turn around, and do absolutely nothing and just sit tight and wait till the market drops and it starts to consolidate, and then I buy more. That's the other option. Here's also good news, though, for those of you on the new gen side. I didn't want my new gen coins with Bitcoin all the way up at 22,000, 23,000. I'd rather get my new gen coins if Bitcoin is in the 16,000 to 17,000 range. Or in other words, Ethereum is more towards the $1,200, $1,100 range rather than $1,600. Now give me my new gen coins because I know what's going to happen later. It's going to rise up. I can make an extra $100,000 off of that. So we'll see what happens off of that. Other news is in 30 minutes, I will be on the WCL call. A lot of their focus right now is on two things happening, especially since today's the 11th, the travel portion of their business and the final coin. I think about next week, you'll be able to move those around and sell them, those that are unlocked. Although, again, this is not a market that you want to be selling anything. It goes live. I'm going to, my final coins, I'm not moving a muscle on them. I'm sitting on it because I know down the road, by default, not that they have to do anything spectacular, but just ride with the rest of the market. So, yeah, that call's in 30 minutes. Tonight, I am doing a follow-up call from last week. Especially, it's going to be is going to be important tonight because of what happened yesterday. The Digital Dollar Project white paper. I think I only read, 10 pages last week? 10 pages. So I'm going to do that again tonight. And this is public. You don't have to be in our ILCA community. This is public. And I will post the link for that later on, but it will be streamed on all the Facebook groups. So if you don't want to go directly to my StreamYard, you can use the Facebook and just watch it live as well. But that's going to be at 8 p.m. Eastern, 5 p.m. Pacific. And after the events of the last 24 hours, this is more important than ever. So you guys can see what the government is up to. And we don't have a choice on what's about to happen. We're all going to be a part of it, whether we like it or not. All right, and that is it for tonight. I will be doing Starvara call tomorrow night as well, 8 p.m. Eastern, 5 p.m. Pacific. And just since this is public and people ask me, Brandon, what projects are you a part of? Yeah, 7 p.m. Central tonight, 8 p.m. Eastern. What projects are you a part of? Are you focused on? Because I'm not a part of everything. There are some good projects part of. Let me repeat what I said. There are good projects that I am not a part of. Just because I choose not to be a part of it doesn't mean I don't think it's good or I think it's going to fail. It's that it's not my focus. Sometimes you have to say no to good opportunities. Lynetta, send me a private message on Facebook, and I'll send you the Starbar information. Send me a private message on Facebook. Don't forget now. Send me a DM. So these are the things where my focus, at least for the next 90 days. For the next 90 days, what is Bitcoin Brandon doing? Number one, ILCA. ILCA. That's always number one. I lead with ILCA. Crypto education is key. It is everything. ILCA. The second that I'm most excited about, because it covers three things, is Starvara, because of gaming, blockchain and crypto, and metaverse, and being able to invest. It hasn't even launched yet. That has the potential to be a multi-billion-dollar empire. Will it succeed? There's no guarantee. But I'm willing to take the risk, because what if it does? The third after that is still, I've always been a part of WCL. I've got six-figure holdings and assets with WCL. So I'll be on the minutes. And then finally is something that also hasn't launched yet, which is called NFT rewards. And there's no cost of signing up with that right now. So there's no risk. So whether it's going to succeed or fail, I don't know. But if I ain't got to pay nothing, let me get in there and see what's going on and see what's going to happen. They launch at the end of this month. So those are the only things that I have my focus around. And there's a lot of other things on the peripheral. Like you're going to hear me talk about my ILCA opportunities probably in the next 30 days or so. That are things that has nothing to do with crypto. So there's a lot happening where we can make some good money in. But that's where I'm focused. I know people, well, Brent, you got to get on Live Good and all this others. That's great. That's just not my focus right now. Y'all do you over there. And if you want to be a part of anything that I have going on, send me a private message and I'll get you the information on them to get yourself plugged in. All right. That is it for today. I got to do WCL 30 minutes and then I'm off and I'll be back tonight, 8 p.m. Eastern, 5 p.m. Pacific. And I'm going to create that link and post it out right now. Take care, everybody. Bitcoin Brandon out. Bye-bye.